lines of technical support and resistance on the charts. On the agenda today, the stories moving the markets. We'll mention oil, the Fed, geopolitical tensions, more stuff, the next events to look out for, key levels of support and resistance, and we'll do it for all major currencies. When we're talking about the US dollar, we're talking about dollar yen, of course, then we'll move to the world's most popular currency pair, euro dollar. Lots of things going on in the UK with the pound. We'll mention that, more than mention, we'll discuss it, and continue with two commodity currencies, the Australian dollar and the Canadian dollar. So let's jump in. Top stories. Markets, we're talking about the fall in oil prices, and it has an impact on the dollar. It has a positive impact on the dollar, not so strong because of other factors, but we should mention that there's an inverse correlation between oil prices and the US dollar. When the price of oil is lower, the price of the dollar is higher, and the other way around. Now, it is far from perfect, but because oil has fallen so much, it is important to note that out. Okay, some geopolitical news. In Saudi Arabia, there's a new crown prince, Mohammed bin Salman, which is young, energetic, but also these changes are causing worries. Trump is disappointed with North Korea, with China's efforts to stop North Korea. So these issues, these geopolitical tensions, they push dollar yen a bit lower from the highs. Okay, the yen is a safe haven currency. But of course, we cannot talk about the dollar in the past week or so without talking about the Fed. So, Fed speak recently. The Fed is less hawkish than it used to be. It is not pushing the dollar higher like we began this week. So at the beginning of the week, we had Bill Dudley of the New York Fed being quite optimistic. But this optimism is fading out. It's moving out of the picture. And we have other members of the Fed also speaking their minds. So Charlie Evans of the Chicago Fed is worried about the impact of Amazon. With Amazon, prices are always lower. They don't want to make a big margin just to get more market share, and this is pushing prices lower. This means less inflation and a weaker dollar eventually. Kashkari, Anil Kashkari, which dissented in the vote, he also echoed Evans. He said similar things. And the most recent thing is Harker, which used to be a hawk, but he's also worried about inflation, okay, and thinks that the next moves of the Fed might be delayed because of that, and that, of course, is negative for the dollar. The next time the Fed is going to raise rates, probably be only in December, only in 6 months from now. Okay, so the US dollar is still higher than before the Fed decision. Is it, but it dropped a bit. Is it a correction or a change of course? I think the dollar does not have strong fundamentals to stand on, and there are reasons to see it falling. But, of course, time will tell. A few figures, we didn't have too many indicators this week. In the US, existing home sales came out a bit better than expected, 5.61 million. But the current account also a bit better than expected. Still a deficit of 117. These are second tier or third tier figures, not the most important ones. Not things that we had last week or things that we have next week. So the next events, today we have the weekly jobless claims, 12:30 GMT. We also have Powell from the Federal Reserve talking at 2 GMT. Usually doesn't talk about monetary policy. And the last indicator is a bit more important. It's the new home sales coming out tomorrow, Friday at 2 GMT. A look into next week. We have on Monday, 12:30 GMT, the durable goods orders. And then we have other figures, but we'll talk about them next week. But this is an event worth mentioning. This is already a top tier one. In general, dollar yen is sensitive to US indicators, rises with the chance of a rate hike, in this case falling with lower chances of a rate hike. It falls when Trump is in trouble. It's worth mentioning this, that politics have been a bit behind, and monetary policy was the front, but we might have a revelation of the healthcare bill in the Senate. Why am I talking about that? Because this could cause trouble for Trump if it doesn't pass through, and it could hurt the dollar. But if it passes through easily, becomes a new law, then it's good for the US dollar. So far, just something to look out for. Currently, people are not talking about it. It does not influence the dollar, but it could have an impact. And what we've seen, dollar yen falling, all geopolitical issues. Now let's look at the charts. This is the MT4 platform brought to you by OctaFX. So here we are on dollar yen, currently at 111. As you can see here on the chart, we can see lower lows and lower highs. Now, this is a downtrend. If we're seeing it over and over again, especially the lower lows here, I think we have a trend. In any case, the levels to watch out for in dollar yen, currently at 111. So from the top of the tops, 114.30, okay, the cycle high, 113.15 right here, and then 112.10, followed by 110.70. We're getting close to this level right here. Much lower, we have 108.80 that we've seen just last week, and the cycle low is close to that level. It's 108.10. Okay, so that's dollar yen. I can see here downtrend, but trade with care. Let's continue to euro dollar. Euro dollar also had its issues. The euro had the ECB, the European Central Bank, is thinking of delaying the taper announcement, keeping the cards close to the chest, not giving it news. That is euro negative because markets are expecting an announcement that the European Central Bank will print less money. Printing less money, the euro is worth more. So we've seen the euro a bit hurt from that. On the other hand, politics, well, looks good in the eurozone. Merkel, German Chancellor, leads with 16% in the polls. Markets like her. And other figures, well, again, we didn't have top-tier figures, but the current account in the eurozone missed with 22 billion, but this is a surplus. And we had an attempt for a terror attack in Belgium. It had a limited impact. It didn't succeed, luckily. Next few events to watch out for. Thursday at 2 GMT we have the Eurozone Consumer Confidence. It's today. Tomorrow we have the Purchasing Managers Indices. These indicators are looking forward. Okay, the most important one is at 7:30 GMT. That's the German manufacturing one. On Monday we have a top-tier figure from Germany. Again, it's the IFO Business Climate. It is at the highest levels since 2006 or 2007, before the crisis. Let's see if it continues, showing optimism for Europe. And, well, looking already later towards next week, we have inflation figures from Germany coming on Thursday. In general, euro-dollar was on an uptrend. Now it's consolidating because the ECB, the European Central Bank, was a bit more dovish and the Fed a bit more hawkish. So the monetary advantage that the euro had is lost. However, politics looks better in the eurozone, especially since the French elections. Growth is stronger in the eurozone as well. So things are looking better in Europe. The uptrend now turned into a sideways trading, as I said, but I think the longer term picture is still to the upside. Let's look at the charts to show you what I'm talking about. So this is euro dollar. Since the beginning of the year we had an uptrend, but in recent weeks we're stuck here at this kind of level, currently at 111.63, but we had a few failed attempts to break above 113, which is a strong line. If we do break above that level, we have 113.60, and under 113 we have 112.30, which used to be a top few days ago. Then 111.20, the recent low, okay, also was a low in late May, and then it's followed by 110.25, much lower levels, and then 108.40, which was the lowest level that we've seen after the French elections. Okay, let's continue with the pound. So many things going on in the UK. So at the beginning of the week we had Mark Carney, the governor of the Bank of England. He ruled out a rate hike, okay? So last week we had the Bank of England, 3 members voting for a rate hike, and he said, no. It's out of the, it's not on the cards. That sent the pound lower. He contradicted the hawkish Bank of England vote, but then one of his colleagues, Andy Haldane, said he'd considered hiking. So that pushed the pound higher. All in all, volatility is very high in the pound. On the political front, we have high uncertainty. We still don't have a deal for a new government, and the vote of confidence is Thursday next week. So watch out for that. A deal between Theresa May and her Conservative Party and the Northern Irish DUP. Okay, and we had Brexit talks beginning on Monday this week. Hopes for a softer Brexit are beginning to fade. We had some optimism from the Chancellor Philip Hammond. Now these hopes are fading away. Today there's a summit in Brussels, and Theresa May, Prime Minister, she's going to be there. So watch out for any headlines, but we've seen that monetary policy also here moves markets more than politics, at least in recent days. Okay. Of course, if we have political uncertainty, we could have a delay of Brexit, and that could be an issue. But again, Carney, Haldane, they had more impact. Some data figures: we had public sector borrowing rising by only 6 billion. That was good news. The bigger events come later on. We have today a 10 GMT CBI industrial order expectations, a second-year figure. And next week, can already look out to next Friday. We have the final GDP read and the current account. In general, pound dollar. Here's a summary of all the factors moving the pound. The good thing, something positive for the pound, is that there are hopes for a softer Brexit. Another good thing is that we have a hawkish Bank of England. We had a hawkish Bank of England last week, and a hawkish member, Haldane, talking about raising rates. On the other hand, we had Carney talking about the other topics. The bad things that are weighing on the pound: political uncertainty and economic weakness. We're going to get a reminder of that in the GDP read. Another ugly thing, the good, bad, and the ugly, is Brexit talks. So far, it hasn't been that ugly, but things can get worse. Okay, let's look at the pound dollar chart. So here we are, the OctaFX MT4 platform. Let's zoom in just a bit so we can see this fall after the elections. Currently, we're at 126.65, moving a bit lower. The pound is under pressure, but not falling very fast. So if we look from top to bottom, we have 129.25, 128.20. Recent high right here. 127.75, 127. These are all lines within recent ranges. Okay, 126.30, recent low right here. And then we fell all the way to 125.70 when things got worse because of Carney. And if we fall below this level, we're looking at 123.50. Okay, so that was the pound. Lots of action there. Certainly more volatility than in euro dollar. And let's continue to the Australian dollar. So Australian dollar is a risk currency. That means when we have worries, geopolitical worries that we mentioned at the beginning about North Korea, about Saudi Arabia, oil prices, the Australian dollar suffers a bit, it weakens, okay? But we had some positive news for China, Australia's #1 trading partner. MSCI global benchmark, they began including Chinese stocks. So that's positive for the Australian dollar. The Melbourne Institute's leading index was flat. Another thing to mention, big events next week. Next Friday, so we don't have too many Australian events. We have the Chinese official purchasing managers indices. So relatively light calendar for the Australian dollar. This doesn't mean no action. Okay. In general, we had an uptrend from the lows in Aussie dollar. Probably reached its limit. Okay, we saw some retracement. We had recently positive data from Australia, from China, good news. And on the other hand, we had some US dollar strength because of the Fed and this risk-off sentiment, worries about geopolitical issues. It stalled the rise. We've seen the pair stop. Moves are again more subdued than in the past, a bit more limited. Let's look at the chart. Aussie dollar here. So we do see the uptrend continuing, but it's a bit more, I would say, spread out, okay? A bit more limited than it used to be. We're off the highs, that's for sure. Still, we're seeing higher lows, and that's a positive sign. That means that the positive trend continues. Okay, so if we list the lines from top to bottom, we're talking about 76.80, recent high, then followed by 76.35. That's where we stopped right here. Then lower we have 75.60, 75.15, and 74.10, much lower. Okay, so we have a busy area and then lots to the downside. If we do have some kind of a crash, we're talking about 73.25. Okay, now let's finish with the Canadian dollar. What I was surprised to see, well, let's begin with some data. Wholesale sales beat with rising 1%. That's the strength of the Canadian economy reflected in yet another figure. Crude crash. Prices of oil have fallen. WTI is trading at the $42 handle. However, the Canadian dollar still looks strong. Let's discuss a bit more about oil. So we had oil falling because Nigeria and Libya are exempt from the OPEC production cuts. It means that they produce more oil, that OPEC in general produces more oil than was expected, and production of oil in the United States, shale production continues swiftly. Again, the Canadian dollar remains strong. So we're seeing how the strength in the Canadian economy, the hawkishness of the Bank of Canada, is helping the Canadian dollar beat the fall in oil prices. Next big Canadian events. Here we do have top tier events in Canada. Retail sales today at 12:30. Tomorrow inflation data, which is even more important because the Bank of Canada cares about inflation, of course. And next Friday, look into next week, we have Canadian GDP, gross domestic product for April, the first month of Q2. Okay, in general, the Canadian dollar is now, well, dollar CAD is on a downtrend. That means the Canadian dollar is on an uptrend. Domestic strength beats oil, at least for now, until things change. 130 to the downside is a big barrier. We had some retracement after the big falls. Now let's look at the charts. We're off the lows in dollar CAD, but in general the trend remains to the downside. Let's zoom in just a bit. So we can see this downtrend right here. It reached a low here of 131.60. Anyway, the lines from top to bottom on dollar CAD, 137.90 is a line worth mentioning because it's the cycle high. 136.40 follows 135.40, then followed by 133.80, which once we had a breakdown under this level, we didn't look back. Then we have 133 close by, 131.60, the cycle high, at least for now, cycle low, sorry, at least for now. And if we fall below, of course, we're looking at 130, which is a round number. But we're now a bit above the lows, but the trend remains to the downside. Okay, so that's it for today. Thank you, everybody. Sorry again for the technical issues. Hope they won't happen again. Any comments and feedback are always welcome. So that's it for today. Have a safe and successful day in markets, and great weekend, and see you next week. Thank you and bye-bye.